All right, guys, welcome back. This is our 8th video in the ultimate guide to trading. So this one is going to go over how to pick an exchange and overall exchange fundamentals. Okay, so how to pick your exchange and exchange fundamentals. So I expect this video to go pretty long. There's a lot I want to cover, but all of this information is very important, okay? And I don't want to rush through it because you really need to understand this before you really start diving in. So the very first thing we're going to go over, and it sounds like a really stupid question, but I'm going to ask anyway. What makes a price a price? Why is Bitcoin currently $54,794? Okay, why is this even a thing? Who dictates this? Is this the exchange making the price and they're saying, hey, this is the amount of money that we're selling it for? Or what? So let me explain this to you guys in full detail so you fully grasp this, because this is a very, very important concept you have to understand. So this is an exchange. This is Coinbase Pro. This is an old account I really don't even use anymore. There's really nothing on here. So that's why I really don't care about you guys seeing this information on here. But on this exchange, the price is listed right here. Okay. What this means is that $2,428.65, that was the last agreed upon exchange. Whatever the last agreed upon exchange is the current price of that coin. Okay, so look at, you have buyers and sellers. Whenever they come to an agreement and an exchange is made, that is what the price is of the coin. So no one dictates what the price is. The exchange has no control over what the price is. All they're doing is putting buyers and sellers together, and they're working an agreement to find out whether or not it's bought or sold and for what price. Okay, really, really simple. So don't overcomplicate it. So don't think there's someone coming involved and trying to dictate what the price is. All an exchange is a way to bring buyers and sellers in the same room, and they can work out agreements, and the exchange helps facilitate that. So we're going to go on here to chart, in this chart over here. This is TradingView. Each one of these exchanges is listed up here, right? And they're all selling the exact same asset. They're selling Bitcoin compared to US dollar, and this is the price that they're selling it for, right? This is the last agreed upon price for this coin. You can see this one's 55,642. This one's 55,731, right? These are different prices. But why are they different? Why is this one $300 cheaper, or $200 cheaper than some other exchanges? Why is that? The reason why is because each and every exchange is an entirely different entity, okay? There are different buyers and sellers on each of the exchanges. And because there are different buyers and sellers on different exchanges, the price on each exchange is going to be different from each other. So whoever's offering money or offering Bitcoin or offering to buy Bitcoin on one exchange is probably not likely to be buying it on a different exchange. So because of that, you have an entirely different microcosm of people who are all working, trying to buy and sell these different coins. So that's a very important thing that you guys really have to understand. Each exchange is different. They have their own people on there. They have their own buyers. They have their own sellers. And because of that, the prices will be different. Now, if the price becomes so drastically different, let's say hypothetically that over here on BitBay, it becomes $2,000 cheaper on BitBay than it does on, let's say, Coinbase. Okay, let's say it's $2,000 cheaper on BitBase than it is on Coinbase. Is it logical for you to go on the BitBay, buy Bitcoin at $2,000 cheaper, and then sell it on Coinbase and make $2,000 per coin? Yes, it's 100% legitimate. And that is called arbitrage. Okay, that's when you take coins from one exchange at a lower price, bring it to another exchange, and sell it to a higher price. And whenever people do that, they're going to bring the price up because the demand increases on the lower exchange, and it's going to bring the price down on the one it sells it to because the supply increases on that exchange. So because of that, over time, every exchange is going to eventually come to an equilibrium where they all mimic the same. They're all going to rhyme. However, there are times in exchanges' histories where their prices are drastically different for a short period of time until the arbitrage does happen. So I'm going to show you an example of that real quick. We're going to go over here to BitBay, and there's a lot of reasons as to why this is happening. But over here you can see that this was 5-6 hours ago. Yeah, about 5-6 hours ago. BitBay was trading at $49,000. If you go to any other exchange, 49,000 is way down here. It never even touched that far, right? So even though BitBay was trading was so far below all the other ones, once that did happen and the price did drop that far, people were buying from BitBay, going to other exchanges and selling it to make the price become an equilibrium. Okay, so every exchange is different. Price differences do happen in short periods of time, but over time they will all become essentially the same. That's basically where I'm going at here. Now let's talk about how an actual exchange operates. Okay, the fundamentals of an exchange itself. So this right here is the Ethereum US dollar pairing on Coinbase Pro. Okay, like I said, this is an individual exchange, different buyers, different sellers than other exchanges, and it works independently from other places. Okay, but let me explain what all this actually means. So right here you have the order book, and what the order book is people actually going out there. If they're up here on this part, that means that they are selling Ethereum. These people up here are selling Ethereum. Okay, these guys, there are about 200 Ethereum on this exchange being sold between 24.16 and 24.29. Okay, so these are people who have the Ethereum out there and are saying, hey, I'm offering this Ethereum to anyone who wants it, and they're just sitting there. Now down here on the other side, these are people who are looking to buy Ethereum. Okay, people who are looking to buy Ethereum. So right here, there are 300 about 300 Ethereum worth of dollars. Okay, Ethereum worth of dollars sitting here between 24.10 and 24.12. Well, as you can see, the price is going down, so now it's going to increase down to the 2400 mark. Maybe. Right? It's all going away. It's all going away. There we are. The prices went down. So all of that liquidity, all those people have now had their orders filled. They have all made those purchases that they're looking to make. Okay? And it's going to keep going back and forth, a constant fight between, like we said before, the bulls over here who want the price to go up, but of course they want to get filled so that their price can go up, and the bears who are up here who are looking to buy or sell their items because they're expecting the price to go down, right? So we have a constant fight between the bulls and bears, and this helps show that. So if you are out there and you are placing your orders on the market just waiting for someone else to take it, that's called a limit buy or a limit sell. So in theory, I can go out here and say I want to buy 2 Ethereum for $2,410. That means I put up that I allocate $4,800 to Coinbase and says, find me someone who's willing to sell their 2 Ethereum for this price. And it will stay on the order book just sitting there until they're able to fill this order. On the other side, let's say I own 2 Ethereum and I'm looking to sell my 2 Ethereum, and I'm going to put them on the order book for, let's say, $2,430. That means that this order will stay on the order book until it is filled. That means until Coinbase is able to find me someone who's willing to buy my 2 Ethereum for $2,430. It will stay on the order book on this big list of stuff right here, just chilling until Coinbase is able to make this transaction actually happen. Okay, so that's how that works. So if you are out there and you are placing an order out there and you're leaving it out in the market, you become what's called a market maker. That means you are making the market, you are making the order books, you are filling it up and establishing that liquidity. Okay, this is all called liquidity. This is all the people who are out there waiting for someone to fill it in. Let's see, yeah, depth chart, there we go. And this right here, the depth chart, actually shows what this is right here. These massive walls are the visualization of the orders that are currently on this site. So all these people over here are trying to buy Ethereum, and they're trying to buy, and it shows you like at $2,400, which is $14 less, there's currently $2 million worth of US dollars sitting here waiting to buy Ethereum. Okay, that means that someone would have to sell $2 million worth of assets into the market to drop the price on this exchange by $12. It's quite a bit of money, right? So I hope that makes sense on the buys and sells for the order book and what an order book actually means. So this is called liquidity, all this massive amount of money that's stacked up waiting to buy and sell orders that have already been set out there, waiting for someone to take those orders. So let's talk about taking an order. Okay, this is called a market buy or a market sell. And how this works is you have these people on the market who have placed their orders out there, and you want to buy Ethereum. Okay, you want to get the best price you can, but you want to execute this order immediately. You want the Ethereum now. It's my Ethereum and I want it now. So what you do is you go out and you put $5,000 in here and you go place buy order. And what's going to happen is Coinbase, the actual exchange, is going to get you the best possible deal that it can. And how is it going to do so? It's going to take that $5,000 and skim off the very top up here and get you $5,000 worth of Ethereum that people are actually selling right now and get you the best price possible. Okay. If it is a small amount of money, that's going to barely even dent into this this massive order book, right? But let's say you're a whale and you have some serious cash. Let's say you go out there and you want to purchase $5 million or $50 million worth of Ethereum. That's 19,000 Ethereum. Can it do it? Yes, it can. Okay. Then go out here and it's gonna skim until it gets to the $50 million worth of Ethereum. There you go. So if you were to purchase $50 million worth instantaneously, it would go out there and take every bit of Ethereum, or it would take all the people who are actively selling Ethereum right now, and it would shoot the price of Ethereum up from $2,415 all the way up unto $2,759, because you have bought everything that exists in the market up until that point. Now, as soon as you do that sell, and all these sellers now have been executed, right? Now all these people who were looking to sell have gotten their fills done, and the market is $300 higher than any other exchange. What do you think is going to happen? People are going to rush in to try to sell their Ethereum for $300 higher than the rest of the market, right? It just makes sense. So what you're looking to do is the arbitrage will take place, and this order book will slowly but surely get filled back up. So even though the price will jump and spike up to $2,700, it will eventually start getting filled back in just like it was before. But yes, you 100% can do it. So when you market buy or market sell, the exchange will go out there and find you enough buyers and sellers to complete that order, and they'll get you the best possible deal they can. So it's important to understand that the exchanges don't own the coins themselves. They don't own them. All they're doing is being a place where people can buy and sell and get the best price if you're buying, or best price, the lowest price if you're buying, or trying to get the highest price if you're selling. Okay, just like for market sell, you can also market sell. So you have Ethereum, right? You're gonna go out there. If you're selling like 1 Ethereum, it's gonna barely do anything in the market, right? They're gonna find you 1 Ethereum, which will be like, way down here. Very little. There we go. 1 Ethereum will skim off the top. Okay. Oh, it's even less than that. I can't even get that far. Holy hell. But the point is that it will just zoom in really quick or really closely, and it will cut off 1 piece of Ethereum and give it to you, right? That's totally okay. The exchange can handle that. It will find people who are actively looking to buy it because they already have orders on the market ready to buy this item, and they will and you'll offer these Ethereum into the world, and the exchange will get you the best price it can. Now, if you were to go out here and sell, let's say 5,000 Ethereum, there you go, 5,000 Ethereum, can it handle it? Of course it can. Actually, we'll do more than that. Let's do 10,000. There you go, 10,000. So it's estimating you get $22 million for your 10,000 Ethereum. And so if you instantly sell it, it will instantly take this entire chunk right here, the entire chunk, and have all these orders filled, right? Because these guys already have an open bid saying, I want Ethereum for this amount of money. Well, if you throw that Ethereum into the market, all these guys will get filled. And so what's going to happen is the price will instantaneously drop to $2,100 per Ethereum, which is really, really cheap, right? Compared to the rest of the market. So what's going to happen? The market's going to freak the hell out, and they're going to go in there and buy like mad, right? Because the Ethereum is so much cheaper. They're going to buy like mad, go into a different exchange that's selling it for the $2,400 because all the other exchanges have not been impacted by this. Just because you buy or sell on Coinbase has absolutely zero impact on what happens on Gemini or on Kraken or Binance, okay? It doesn't matter. All you're doing is buying and selling on that individual exchange, which is an independent entity. So you go out there, you sell, or you instantly sell 10,000 Ethereum on the open market, and then the price is going to instantly drop to $2,100. Everyone rushes to buy on Coinbase because it's so incredibly cheap. The liquidity starts getting filled back in, and over time it does become filled back in, and this usually happens in the span of minutes. Okay, so because you have all these trading bots who are out there on the market, and they actually fill people's orders in when they see inefficiencies. So that would be a massive inefficiency. So the trading bots will go out there and take advantage of the inefficiency and quickly fill those order books back up. So you as an individual person, it's very unlikely you'd be able to really make much money off arbitrage because these bots go out there and do it automatically. Just understand this is a concept that's very important to understand, that these bots do exist. Arbitrage does exist. Each exchange is independent. And usually these inefficiencies are filled very, very quickly. Now let's go into stop loss. Okay, so we talked about market buys, market sells, limit buys, and limit sells. The next one we're going to talk about is our stop losses. So what this means is that, like we've talked about in our risk management videos, there's a point to where your trade no longer makes sense. Okay, no matter what that reasoning is. The point is that, let's say we were going to be playing this impulse right here, and the stop loss was if we broke below this level right here. So let's say 23.58 is our stop loss. So we go in here, 23.58. That becomes our stop loss, and we are going to sell 10 Ethereum into the open market if it dropped to this level. There you go, 25.58. There you go. So let's say that if the price reaches 23.58, we are going to instantly sell 10 Ethereum into the open market to make sure we don't lose any extra. Okay, and we create these numbers based upon what our charts tell us and what our trading style is. If you're going to be in this group and you're going to be utilizing the let your winners run and cut your losses early mentality, you'll be using stop losses a lot because it helps preserve your capital so you don't lose extra money. Because once your trade becomes invalidated, you are then trading on hope, and hope is not an indicator. Hope is not a trading style. That you might as well go to the casino and gamble, right? So this helps ensure that you don't trade on hope. It's a defined level to where once this level is breached, you now will sell your funds for whatever value you can get out of it, right? Your capital preservation. So for a stop loss, it's the same exact concept. Once it reaches this level, it will open sell into the open market, or it will sell into the open market, and you will get the best price the exchange can find for your 10 Ethereum. And a stop buy as well. Let's say you're in a short position, or you're going to be doing a breakout play. So once it breaks above this level, you say, well, whatever level I had, this will be invalidated. And once it breaks this, I think it's going to go a lot higher. So you go ahead and actually have a stop buy at 24.71. $24.71, and you want to instantly buy 10 Ethereum. Okay, so what that means is that once it breaks above this level, you're going to instantly buy 10 Ethereum for whatever price, the best price that Coinbase can get you. Okay, so that's called a stop loss and a stop sell, or a stop buy and a stop sell. I hope that makes sense on there. And we'll go into, there's a lot of fundamentals that go into this particular interactions between these things. And we'll go into that in further videos. Just understand for now what these things are, and then we will build upon it later. Okay, so like I was talking about earlier on how if you open buy or open sold a ridiculous amount of Bitcoin into the market. So let's say we went ahead and bought, I think it was 50 million is what we were looking at earlier. Yeah, we want to open buy $50 million worth of Bitcoin or Ethereum. I'm going to zoom out, okay, until we can actually have that filled. There we go, okay. All this liquidity, all this built up power right here, right? All these people who are selling their coins, there's a lot of people here selling it. But no matter what, if you do buy or sell a lot of an asset, you're going to have what's called slippage. And what slippage means is that if you instantly buy or sell, although you will get quite a bit of it at this current price, 2,400, you will also be buying quite a bit of Ethereum over here at 2,500 and at 2,600 and at 2,700, okay? So, and this is called slippage once again. So because the market slips, you're going to actually take quite a bit of coins at a lot higher price than you were probably expecting. Okay, if you're buying a low amount of coins, like if you're only buying like 1,000 worth or $10,000 worth of Ethereum, the slippage on this exchange will be very, very low. Okay, because there's a lot of liquidity. So the more liquidity you have in a market, the less slippage you will have. On both ways. Just like if you were to instantly sell the 10,000 Ethereum into the market, okay, you're going to have quite a bit of slippage when that market sell is actually executed. And the more liquidity you have, the less slippage you will have. So in order to avoid having slippage or as much slippage as you can, you want higher liquidity and vice versa. So let's go and I'm going to show you an example real quick. Yeah, so this is what happened here. This is called slippage. Someone went out there and instantly sold however much BTC as they could, right? Whatever amount of BTC they could, and they actually went over here and they had a massive amount of slippage. The price dropped 10% on this exchange, and that was nowhere else. So yeah, they got some coins over here for 55,000, but they also bought coins for 53,000 and 52,000 and 50,000 and 49,000. Okay, so they got really, really bad deals over here, but they probably got decent deals up here, right? So that's called slippage, and the reason why this happened is because BitPay is notoriously known for having very low liquidity. That means very few people are actually on this exchange actively trading. And since there are very few people on there, that means that there's very few orders on the market. So someone who sells a relatively high amount will get really, really bad deals for their coins if they open sell it, depending upon liquidity. Now, another thing to think about is Bitcoin obviously is very popular. A lot of people trade Bitcoin. However, there's a lot of coins out there who don't have much liquidity. So, like yesterday, I actually had a question over SafeMoon. That was one of the big ones that they were talking about. And I was interested. I was like, wow, SafeMoon, interesting. Let's look at that real quick. Coinmarketcap.com. I'm going to go over here to SafeMoon. Well, I was interested in it, but then I went over here and saw that the market cap is actually pretty dang low. Well, let's see. What is it at? Market cap on here. Yeah, $2,400. Or I'm sorry, it's ranked 2,400 out of all the pairings that exist. So that's great. If I was to go into an exchange and buy SafeMoon, this means that there will be very, very little liquidity, very few people buying and selling. So what that means is that if I go out there with any substantial amount of money, I'm going to have massive slippage when I purchase this coin. Or on the other side, if I'm trying to sell my SafeMoon because I have now reached my targets and I try to sell it, it will be really, really hard to find sellers for this coin at a decent price. Okay, so that's one of the big problems you have with trading these super, super low market cap coins is that you have to have a buyer to buy the coins from, and you have to have a seller to sell them to sell the coins to. And if you can't find that, it's a very, very dangerous proposition to try to buy it. So even if you do get a good price for it, if you can't sell it to anybody because no one's going to buy it, is it really that good of a price? No, you have a worthless coin, or you have a coin that's technically worth a lot of money, but you can't actually find a seller for it, so you're sort of stuck with the coin until, eventually you do try to get rid of it. So that's something to take note of when it comes to liquidity. If you're looking at a low market cap coin or a not so popular coin on a low liquidity exchange, you're going to have some incredible movements back and forth. It's absolutely astronomical. So you'll have coins that move up and down 50% every day because there's no liquidity on them. So the people who are buying and selling are basically just sitting there making a ton of money due to slippage. So that's something to consider as well. All right, now let's go back, and I think I've hit on slippage pretty nice. Let's do this real quick. I'm about to talk about exchanges, and exchanges are very important to me a lot about these exchanges, things to look for. If you go over here to the guides and go to tools of the trade, we actually have a ton of different ones that you can mess around with here. All right, a lot of good information, some exchanges on here, Trading View, Testnet, all these things are very, very good resources. I would really, really, really appreciate it, guys, if you guys would use the ones that we have here, because we get referral bonuses. And I think that me and Nico are providing enough value to the group that it would really be nice if you guys could use our referral bonuses so we get our little bit of kickback for whenever you guys do go out there and start becoming traders. So if you could, please use that for TradingView, for any Coinbase, Bittrex, Binance.us, Coinbase, etc. Any of these ones you want to use, please use our referral bonuses so we get a little kickback. All right, that's what I'm going to say about that. Now let's talk about picking an exchange and what you're looking for when you do pick an exchange. So let's go up here, make a little text document, and I'll start listing them out. So picking an exchange. All right, number one thing you're going to look for, or the first thing, not number one, the first thing you'll look for is security. Okay, how secure is this exchange? This is a very, very, very important thing that you must understand. A lot of these exchanges are not regulated, and a lot of exchanges tend to just disappear overnight. Well, if you have your money on an exchange and it disappears overnight, your money is gone. There is no recourse. You are screwed. Okay, so you need to make sure that you do a lot of research on your security on that exchange. There's also been a ton of exchanges that have been hacked to because their cybersecurity isn't very good. And if they hack into that exchange and take all the money out of the exchange, even though the exchange wasn't intentionally taking your money, that money is still gone. And once again, you're probably not going to get your money back. So security is extremely important when you're dealing with any of these exchanges. And if you want to see some examples, all you have to do to really just get an idea of how bad it is, Mt. Gox. This is an exchange that, yeah, it was handling 70% of all Bitcoin transactions worldwide. Okay, 70% of all Bitcoin transactions, and it completely disappeared. Just completely disappeared. The market shut down overnight, and they claimed that all the money was stolen, and it was an incredible amount. They had 850,000 Bitcoin. 850,000 Bitcoin on that exchange. Let's do the math real quick to get an idea. 850,000 times, let's round it to 60,000. So that means they had $51 billion worth of Bitcoin on this exchange. An absolutely incredible amount, right? They recovered some of the Bitcoin, but most people lost all their money. Okay, security is extremely important when it comes to your exchanges. So whether or not it was actually hacked like they claimed, or the owners of it basically closed it down and ran away, which is also very possible, the point is security is extremely important. Now, the next thing to look at when you look at security is, are you able to withdraw your own coins? Can you take what's on the exchange and withdraw it into a personal wallet without doing through any other steps? Well, on most exchanges that is the case. But if you look at Robinhood as a really good example of this, you cannot. You don't actually own the coins themselves. You don't actually own the coins themselves. You cannot withdraw Bitcoin or Ethereum or Litecoin or any of those coins from Robinhood into your own personal wallet. That means you don't actually own those coins. Robinhood owns the coins, and you have to ask them very nicely for your coins. Personally, I don't like that. And because of that reason, I will absolutely never use Robinhood ever, because it's a very shady business practice. So because of that, I would stay away from that one entirely. However, security is my number one thing you need to look for. Number two we're going to look at is coin listings. How many coin listings are there? So if you do want to trade all these altcoins, specifically like SafeMoon and these really, really small ones, you're going to have to go to specific exchanges and actually offer these coins. Some of these exchanges are pretty shady, and they may go directly against rule number one. So a lot of the coins that people ask me about, like SafeMoon, I won't touch because I'm not going to go onto an exchange that I don't feel is safe. So if you do want a coin, you're going to have to find an exchange that offers it, and then you need to make sure it matches all your other criteria before you jump into it. Now, Coinbase is actually pretty good about having quite a bit of coins. It does have quite a few, pretty impressive. So that's an exchange that is known for having a lot. Hubai is another one. I think that's how you say it. Hubai or Hubi or something like that. That one has a ton of different coins on the exchange. And the exchange I use, Binance.us, doesn't have that many coins, but I do like the fact that their security is really well. So that is a trade-off that I am taking. So I only trade coins off Binance.us because their security is so well, and I'm just gonna ignore the other ones for now, right? So and not only are you looking at the USD pairings, you also need to see if they have the BTC pairings. So if you go over here, you can see that all these markets are individual markets, right? There are buyers and sellers for each one of these. So they have in US dollar, they have US coin, they have in US dollars, they have the BTC pairing. So Litecoin compared to Bitcoin. So all these people are offering Litecoin to Bitcoin at this rate, right? Now, since it is a less traded commodity, there's going to be a lot less transactions that happen than if you were looking at Bitcoin itself, right? And there are less people offering their Litecoin to Bitcoin pairings up there, so you're probably going to have a lot more slippage, something to consider. But if you do want to have this opportunity to trade between the coin into Bitcoin, or even the coin into Ethereum, you're going to have to go to an exchange that will offer that. And there's quite a few on here. You also have ones that trade it into euros or whatever, right? So there's a lot of opportunities out there. So you can see Coinbase is pretty good. when you're looking at for a mass listing of coins as well as pairings. All right, so the next one we're going to go into is going to be our allows, let's do this again, allows US customers. Okay, does the exchange that you're on allows you to trade on it? There are a lot of US citizens who trade on Binance. A lot of them. I know quite a few. What they do is they give fake information and they put a VPN out there, and they just make sure they always use their VPN, and they probably will not get caught, right? However, here's the concern with that, and this is why I highly recommend against doing so. If you are breaking the exchange's terms of service, then they can just blacklist you from the exchange. And if they blacklist you from the exchange and say you were not using the exchange legally, they might just not give you your money back. That to me is terrifying. So because of that, I will absolutely never trade on an exchange that does not explicitly allow US customers. That's why I use Binance.us, because it is an exchange specifically designed for US customers. Yes, they're going to report me to the IRS. I have to make sure that I pay my taxes on it, but that is something I'm completely okay with, because it gives me the extra security of not having to use a VPN and not having to falsify information, and to where they may not actually give me my coins back when it's time to try to cash out. So technically, yes, a lot of people do that, but I will recommend against it. So my number 4 thing to look for is going to be their fee structure. This is the reason as to why I don't use Coinbase anymore. Their fees are astronomically high. They really, really are. Let me see if I can find their actual banking real quick. Their fee structure. I can't remember where I have that. Regardless, though, their fee structure is tremendously high. Coinbase fee structure. Come on, where are you at? Where are you at? Where are you at? Buys and sells, buys and sells. I don't even see it on here. What is going on? All right, I can't find it right now. Oh, here it is. I think it's that. Yep, here we go. So they charge 0.5% for offering money, and they charge 0.5% for taking the trade. So for making a trade, 0.5%, and for taking a trade, they also take 0.5%. Now, that may not seem like a lot, but if you want to transfer from Bitcoin into Ethereum or whatever, right, you're going to have to sell into US dollars, so you get charged 0.5%, and then you buy the new exchange, or the new coin will also be that. So 1%. 1% actually adds up quite a bit, especially if you trade as much as I do. And yes, you can get lower amount, but unless you are trading $10,000 to $50,000 a month, or $50,000 to $100,000, or upwards of $1 million, it's still incredibly high. Okay, so these fee structures are very high, and I used to trade so much that this was destroying me. I was paying thousands of dollars a year just in my fees to make these trades. And as a trader, you really want to get the best deal you can, and that really ate into it. So on the other hand, let's see if I can find this. If I remember correctly. So to give you an idea what we're looking at, fees should be right here. So their fee structure is 0.1% for the lowest level. And then if you use BNB to trade, which is what I do, it's only 0.075. So this is, if I remember correctly, it's like 15 times lower in fees than using Coinbase. That's an incredible distance or difference. So yeah, that right there is absolutely makes it worth it to me. So it's like 15 times lower than if I was using Coinbase. So fees are very, very important, but it's not only that. You also may get charged a fee for withdrawing money. You may get charged a fee for putting money in. You may get charged a fee if you use a debit card or ACH, or a lot of different things that there's a lot of different things that can be added into it. So you really need to do your research and dive in and figure out how much fees you get charged to use their service. So very important. That's the reason why I didn't move from Coinbase, because their fee structure is astronomically high, but they do offer additional security features, and they have now become an actual IPO, so their security is higher. So, it's a trade-off. Is that worth it to you? To me personally, it's not, but it may be to you. So something to consider. Next I'm going to go over is customer service. Customer service is a big one because a lot of these exchanges are absolutely overwhelmed right now. And it may take weeks to months to get registered on their exchange because they are just so overwhelmed because of all the FOMO, people trying to jump in and join their exchanges. So there's not much they can do about that. And they're trying to add more people to it, and they're trying to do the thing, but a lot of times the customer service is going to be a massive thing. So like on Coinbase, for instance, you can get registered pretty quickly. They do have a large staff, and they are able to manage it a lot better. Then you go to some other places and they don't respond to literally anything for weeks. And that's terrifying. If I had my money on the exchange and they're not authorizing withdrawal, I want to know what the hell is going on. So look into their customer service, see if it's something that you're willing to deal with or not. So go to Reddit, do Google searches, really just try to dive in there and see if they do have good customer service or not, because that to me is a big issue. So number 6, stability issues. So stability issues is a big one because whenever the market goes up and down very rapidly, and there's a lot of people who are trying to make exchanges, a lot of servers crash, and a lot of these exchanges will completely become unusable. And it may even be to the fact where you may have sold coins you had no intention of selling, or you bought coins you had no intention of buying at that price, and their servers just are not able to handle that amount of pressure. There's actually a meme in crypto to where the bull market's in play when Coinbase can't handle the transactions. And because Coinbase is notoriously known for always going down when the price fluctuates very rapidly. So stability is an issue. Just dive in there, see which ones are able to handle it, which ones aren't. This may be an issue for you. So just dive in and see what you think, where this places on your list, and if that's a big issue or not for you. Next one's user interface. I'm going to talk about Coinbase again. Coinbase is known as the place where all brand new people go and buy crypto. Why? Because their interface is extremely easy. If you go to Coinbase.com, that's fine. You log in. I have my 2FA on. I'll always have my 2FA on, right? But when you go in here and you can just go in here and buy and sell, and you literally just go in here and you buy and sell, and that's it. And it pulls right through your bank account. Very, very easy. This is considered a very, very user-friendly interface. So because of that, this may be something that you're interested in. If you don't really want to dive into and get into all the technicals, all the trading and stuff, I'm assuming that's not you since you're in this group. But if you're trying to get your grandma involved, Coinbase may not be a bad idea, just because she can go on here and fully understand this and makes it very, very easy for her to get started. However, if you look into something like the Coinbase Pro app, this is pretty intimidating for someone of their first time, if it wants to work. There we go. This is a pretty intimidating interface, and especially if you want to get into margin trading on Binance or any of these other places, it gets extremely intimidating. So if the user interface may be a thing for you. Now, if you're in this group, like I said, it shouldn't be an issue because we're going to teach you how to utilize these interfaces appropriately. But if you're trying to get somebody else involved, very likely user interface may be one of the key factors for that. So number 8, liquidity. Now, liquidity in the market can be good or bad. If you are trying to instantly buy or sell, that's obviously very important to have a lot of liquidity, because you can't sell unless you have people to sell it to, right? However, you can also take advantage of a really bad liquidity exchange, and I'm gonna explain this to you. I'm gonna show this how that works. So this is REN, for instance, and REN on Binance. And Binance isn't even a bad exchange, or a low liquidity exchange. But you can see the price dropped from 89 cents all the way down to 0.2 cents. So 2 pennies, from 89 cents to 2 pennies in the span of 15 minutes, and it jumped back up. Okay. This happened during that crash that happened, I'm assuming, on the 17th. So whoever sold up here got a really, really bad deal, right? The liquidity was so bad, and they got some really, really bad deals up here. And yeah, they had a really, really bad day. However, if you were a trader who had some limit sells over here at 5 cents and 6 cents and 19 cents and over here maybe at like 2 cents, those bids would have gotten filled. That means that you would have bought the REN for 2 cents a piece or 5 cents a piece, and then instantaneously it would have jumped all the way up to 88 cents in the span of 15 minutes. You would have made an incredible amount of money very, very quickly, because the market did sell, but you were here to catch their bids. And the other side also exists. Let's say someone buys a ton of stuff, and you actually have your sells way up here at $3, $4 up here. Those bids would have gotten sold if you're the next one up. Or you would have been able to sell your REN for that a massive amount if you had your bids in place. And you could have went in here and rebought right back in 4 times the amount that you had 15 minutes prior. Okay? So liquidity is really, really bad if you're trying to instantly sell something or instantly buy something. But liquidity is low liquidity is really, really good if you're looking to catch what's called stink bids. If you just want to place bids out there, just see if you get filled or not. So both sides of this market is absolutely usable. So low liquidity is very bad if you're trying to sell instantaneously. However, low liquidity is really, really good if you're a very patient trader and waiting for the right moment until one of these stink bids comes down and you get your bids filled. So liquidity can be good or bad, just depends upon the situation. So usually it's a bad thing. You want to have high liquidity, but it's not always a bad thing. And then next one we're going to go over is going to be margin trading. Now, I'm not going to go over margin trading too much in this group. I don't think it's necessary. I think it's an unnecessary risk that can really screw you over. I think we're going to go over margin trading either the next video or the video after. Regardless, so we're going to go over it, at least the broad brushstrokes, pretty quickly. If you do want to do margin trading, there's nothing necessarily wrong about it. Just understand there's a lot of extra risk involved. But there are a lot of exchanges that do not offer margin trading. So if you do want to do the margin trading, you're going to have to go to certain exchanges, and that has to be one of your things you're looking for. So for me, I don't care if it has margin trading or not. It's completely irrelevant to me. But some people have to have that margin trading because they want to have that leverage and make that a massive amount of money or lose that massive amount of money. It's up to you. But that is something, if you are interested, obviously you have to have. And the 10th one is called staking. Some exchanges are now allowing what's called staking. That's where you place your Ethereum or Algo or a few different other coins, and you can place it on the market and you literally just have it sit there. It's not going anywhere, but what they do is they place it into their validator nodes, which are helping to run the entire cryptocurrency itself. It gets very complicated very quickly. Just understand that if you are staking, you get an actual return on your coins that you already own. Some exchanges will give you money back for that staking. Some exchanges won't give you anything. Some exchanges will give you a higher percentage or less. So if staking is a big issue to you, make sure you have an exchange that does offer a lot of staking as well. So these are my 10 big things that you really should be looking for and considering for if you're trading. There's a lot in here. I know there is. Personally, like I said, I use Binance.us. That's the one that I use. If you are going to utilize that, I would really, really appreciate it if you do use this link right here. It will help me. Make sure that I get a little bit of kickback and helps me out for making all these videos and trying to get you guys started. So, and then same thing over here for TradingView. If you're going to use TradingView, which I think is essentially, I think it's necessary at this point. If you're going to be a trader at all, you have to use TradingView. You can't use the interface that's on these things because it doesn't offer you nearly enough information, right? So if you are going to use TradingView, then I would also recommend that you click my link here because it costs you nothing else, but it gives me a little bit of kickback for if you do go ahead and upgrade and make a lot of money and all that good stuff. I also get a little piece of the pie. Doesn't take away from your pool. It just helps me out as well. So that's all I got for you guys. I know I didn't tell you exactly which ones to use because everyone has their own things that they're looking for, right? So depending upon what your own list looks like, that can help me maybe try to get you more onto the path of the right exchange. But do your research on this. And yeah, I hope that all makes sense. So just to recap what we've went over in here, we went over what makes a price, and that is the last transaction that happened on that exchange. We also explained in detail that each exchange is independent. We explained what arbitrage was. You now understand what an order book is and how those are actual people who have the coins ready to be sold, or they have bids ready to buy if the price does come to their level, right? You now understand what market buy, market sell is, what limit buy, limit sell, what happens when you click that sell button or that buy button. Now you understand what stop loss is. You understand what liquidity and slippage is. You now have all of our referral links and all the tools for the tools guides for you guys. Then we also went through our 10 most important things on picking an exchange. So if you guys have any more questions, like always, let me know. And the next one, I'm pretty sure we're going to get into leverage, but I'm going to got to double check on that. So have a good one, guys. I'll see you in the next video.